session, we'll talk a little bit about the sort of financial instruments. Now, for those of you who have been sort of following the SSE conversations and discussions from 2020, while there are a large number of instruments that are envisioned to be there, currently there are two types of instruments that are being largely sort of to commence with. They could introduce the sort of listing on the listing services of the SSE with this, and primarily one instrument which should be of interest to all non-profit organizations. And to kind of walk you through all of this, Manjula Ramakrishnan, who is the Director of Programs at Social Lens, who supports the Value Circle program at Toolbox, will be the expert speaker for today. Now, Manjula is a chartered accountant and brings a very rich experience in auditing and enterprise risk services. Prior to joining us, with which we are most delighted and grateful for, she was at Deloitte India and has focused especially on information systems audit. Since her foray in the sort of social impact sector, she looks closely at finance, compliance, management accounting, financial management, and will sort of unpack the financial instruments and considerations at the Social Stock Exchange. On that note, over to you, Manjula. Thank you.
Thank you very much, Vijaya, for the introduction. Good afternoon, everyone, and welcome to the second session on the Social Stock Exchange. Before we actually go into this session, can you just move to the next slide, please? Yeah, we'll just recap what happened in the last session. As mentioned, Jaswant was the one who actually took us through the entire. She walked us through the requirements of the eligibility criteria of organizations which can be listed on the stock exchange. Also, in terms of what are the the organizations which are eligible to participate, they needed to have a social intent and impact as their primary goal. And this needs to be sort of demonstrated through the 16 eligible social activities that has been indicated as part of the framework by SEBI. So now let's just go into this session now, where we are talking about the modes of fundraising that is available to the NPOs, which are listed and registered on the NPOs. A slightly technical session because all these instruments are slightly new to all of us. So I just I'll try and make it as simple as possible. But if you have any questions, please keep posting it on the chat and we'll try to answer them. So we are looking at four modes of fundraising now that has been approved by SEBI. SEBI is the Securities Exchange Board of India, who's the regulator for markets, financial markets, as well as the social exchange, stock exchange now, because the social stock exchange is going to be part of the Bombay Stock Exchange, or the BSE. So so they are going to be the market regulator for this as well. So what are the four types of avenues now available for NPOs? The first one is the zero coupon, zero principal investments. So these are, so I'll just first go through all the four and then I'll start, sort of unpacking each one of these for you. The second one is called the social impact funds. The third one is through donations through mutual funds schemes, and the fourth one is development impact bonds. So the third and the fourth one, as of now, there not been any guidelines issued regarding this. The first two, the SEBI has issued guidelines and framework regarding this, which we will talk about in the session. Can we move to the next slide, please? So what does ZC, ZP mean? Before we actually even look at what ZC, ZP means, let's just go back into the financial market and see what a conventional bond is all about. What is a conventional bond? So, if, for example, it is nothing but a instrument that is used for borrowing funds. For example, like, there are lots of Government of India bonds, infrastructure bonds, public sector bonds. So what it says is, like, so for example, it is a 10% infrastructure bond, if it says in 2022, say, as an example of a bond. What it means is a person who invests in that bond will actually receive an annual interest of 10%, which is indicated as 10%. And these funds will be invested in an infrastructure project. That's why it's called an infrastructure bond. And the 2022 indicates the maturity period of this bond. That means at the end of 2022, these bonds can be redeemed and the investor will actually receive a 10% interest along with his principal. So if you just draw a comparison to a ZC, ZP bond, so we are talking about an interest rate, zero interest rate, zero coupon. Coupon means interest. So zero coupon. So we are talking about the zero interest rate and we are talking about a zero principal. So if you invest in a zero ZC, ZP bond, you will not receive any interest or any principal at the end of the maturity period. The only returns that has been indicated are the social returns. So I mean, I'm sure everybody has a question. Why is this is exactly like a donation, and why would you offer this when you can actually, when donors can actually come to us directly and give us the donation? Why do you need to create this intermediary now? The reason why is because the credibility of and the transparency that comes along with this, and it also sort of bridges the trust deficit which normally the donors have. There is a robust and a rigorous due diligence process that goes along with the registration. There are, the utilization and the performance have to be reported on a periodical basis. And this actually sort of gives much more, much more credibility to the organizations as well as to the donors. However, we don't have, as of now, clarity on the tradability of these bonds. Whether it is possible to withdraw this, if you don't see any performance, or if it's possible to trade it with another person on the exchange. As of now, there is no clarity on this. So here we are talking about when the features of these ZC/ZP bond. It's like for a fixed duration. So, example, it could be for if it could be the the time period for which your project is being designed, or it could be for and it also could be it is for a specific project or an activity, and it has to be in the electronic forms. So dematerialized form means electronic forms because this is going to be an electronic platform. The minimum size of the issue should be 1 crore. So when you say minimum size, again, you attach a value or a price for these bonds, and then you will issue a fixed number of bonds. So for example, you are looking at, an organization is going to issue 1 lakh bonds of ₹100. So then the entire issue would be the size of 1 crore. And when you're talking about a minimum application, it actually refers to the subscription of each individual investor. So, for example, if I invest, the minimum investment should be 2 lakhs, which will be actually, if I take going by the last example, it will be 2,000 bonds of ₹400 each. That's how it works out. Can we move to the next slide, please? Also, they have prescribed, the minimum requirements in terms of so 75% of the issue needs to be subscribed. Otherwise, they have said that the NPO has to give a declaration saying that why is it, how are they going to raise the balance of the funds, that is between 75% to 100%, how are they going to raise it? And what would be the impact on the objective of the project in case the subscription is not arranged? In case it is not, then they're talking about the refund of the amount received. And in terms of when we're looking at the termination of these bonds, it could be when the entire, the objective for which it was raised is complete, and also in terms of, the tenure of the tenure to achieve the object for which the funds were raised has expired. So these are the two ways where the bond can mature. Can we move to the next one, please? The second one is again a social impact fund. So what is a social impact fund? By nature or the legal status, a social impact fund can be a trust or a society or a Section 8 company. And again, drawing a parallel to the financial markets, it is something like a mutual fund. So I'm sure everybody knows how a mutual fund works, in the sense that where investors will invest in a mutual fund, the mutual fund will in return invest in either equity or debt of other profitable companies. And in turn, will once they receive a return, they will actually pass this return to the investors. So here, what happens in the case of a social impact fund, it's also it's a privately pooled capital, where the SIF can invite either foreign investors or non-resident Indians or Indians, other SIFs, corporates, and maybe CSRs also to invest in the funds. And here, the difference is that returns are only through social returns. Again, they are issued through social impact units, they're called. There is no financial return here. And also, they have made an amendment to the rules now that, the SIF is eligible to receive a grant in the form of grant of, and the minimum value of the grant should be around 10 lakhs. And we were looking at a social impact fund. The corpus of it should be around 5 crores that has been prescribed, and the minimum issue is again 2 lakhs. So here, can we just move to the next one? Here, what the other option that they have also given us in case of ZC ZP bonds, where there is a public issuance, as we talked about in the earlier slides, where organizations can issue these ZC ZP bonds straight or directly on the SSE. This can also be privately placed with an SIF. So the SIF can actually invest in the ZC ZP bonds of the NPOs that are registered on the stock exchange. In case of there are various social venture or earlier it was called social venture funds. Now they have changed the name to social impact funds. So there are various social impact funds that are already existing. For some of these would be the Ankur Capital or the Unitas Ventures or the Samriddhi Fund by the SIDBI. So these are some of the existing social venture funds. And what they have said this, initially these social venture funds or the social impact funds could invest only in the securities of the social enterprises. Now what they have made changes that they can also be invested in the ZC ZP bonds registered on the SSE. So the ratio is 75% should be invested in the securities and 25% can be invested in the ZC ZP bonds. What the other amendment they have made now is that the SIF that can be exclusively launched for the sake of investing in the ZC ZP bonds in the SSE. So in this case, the entire investment that comes to the SIF can be invested in a ZC ZP bonds. Can we move to the next slide, please? So there is a procedure for listing ZC ZP on the SSE. So as initially indicated, so NPOs can actually get listed on, registered on the SSE and also get listed on that. So there are two, there's a slightly difference between that. Where you're talking about registered, you're talking about being just on the SSE. Where it is being, you're talking about listed, you're actually listing a security on the SSE. So if you want to list a security, then there is a procedure that needs to be followed. So there you have to raise a draft fundraising document. Again, I'll just go back to the financial markets where you're talking about a prospectus that needs to be prepared. Similarly, a draft fundraising document needs to be prepared, and this has to be in principle approved by the SSE. It has to be on the website for for 21 days. And post which, what happens is, the SSE will actually review it, give you recommendations, give recommendations, and maybe you'll have to make those changes and again upload a revised fundraising document, which is called the final fundraising document. Can we move to the next slide, please? The transparency and the credibility which we talked about comes through these disclosures and reporting requirements for the SSE. In the SSE, for registered NPOs, say without or without raising funds, they have to have an annual impact report, which the framework has already been prescribed by SSE, and we'll have the upcoming sessions on these. Second, the annual impact report to be audited by a social audit firm. So again, so there is not only is there the disclosure requirements, there is also a third-party validation that happens. Then on quarterly basis, there are category-wise the amount received and utilized. I mean, more or like donor reporting that happens currently, but maybe under a much more rigorous manner and also audited. And that is the reason why we are talking about the transparency and the credibility. And the third part is what happens when a material event occurs. So here, we need to have a policy regarding what materiality means. What is that a critical or a material or an important event that happens? How are you going to define it? And how is it going to affect your project or your listing? That is what the materiality concept that has been introduced here. And it also requires people who actually look into it in the organization, and the timely disclosures of what the materiality events are.